Thank you very much. And Mr. Date, wonderful to have you here. I hope they receive you warmly over in the Senate for your confirmation hearing. I know that at least on this side, we're receiving you warmly. It astonishes me what can happen a year later after we pass the bill. I mean, I don't remember a single one of my colleagues on the other side of the aisle voting for the bill that created the consumer protection. I remember being there working day in and day out, and I don't remember anybody saying, we're for the consumer. As a matter of fact, I really like my colleague from California, Ms. Royce, because the American public just heard the Republican response, the prudential regulator. We're concerned about the prudential regulator, making sure. I'm sure that makes everybody in America feel so warm and fuzzy about the Congress of the United States and what we're doing, because the prudential regulator is being defended here in this fine committee hearing. Let me tell you why I think it's a great hearing to have. I don't know about the prudential regulator, because Bank of America had to cancel the $5 fee, and that's saving the American people. It will save the American people millions of dollars. Safety and soundness? Yeah, the safety and soundness of your debit card and your account each and every month, so that you have extra dollars in your account in order to access your money. Why? Because we passed this legislation that says, hey, guess what? You got to tell everybody. Because you know what? It's dangerous at banks, and it's dangerous out there when people take a gun and stick somebody up. That's true. But you know what you're doing? You're making sure that the electronic stick-ups of the banks on American consumers are stopped in America. And how do you do that? By telling people about what these mysterious fees are. And everybody in America may not know what the prudential regulator is, but let me tell you what they do know. They know about the mysterious fees that show up on their checking and banking accounts, and I'm excited that you're finally going to have an opportunity, hopefully, to get confirmed by the Senate.
Thank you. Gentleman from Georgia, Mr. West.
I want to read a quote. It says, it's from the president of the American Bankers Association. It says, unsound, unscientific, and dangerous. But don't worry, it's not about the CFBP. It's from 1933, about none other than the Federal Deposit Insurance. And the banks railed against it in 1933. But today, I think you'd be pretty hard-pressed to find anyone that thinks that insuring deposits is somehow unsound and dangerous. And I think the fact is that the CFBP won't be doing anything dangerous either, or unscientific or unsound. And hopefully you won't have to wait, 70, 80 years, because none of us will be here. Hopefully it won't be that long before they see, well, maybe you have that hope. But I would like to just ask you, so simplified forms, valuable guidance so customers can actually understand what they're buying and repaying. Can you tell us a little bit about that in terms of a mortgage?
Sure.
What's different?
Absolutely. So if you were to, and I think it's useful to reground this in terms of the credit bubble and the ensuing crisis.
Okay.
So during the course of the mortgage credit bubble, some of the fastest growing products were precisely those products that were the most difficult to understand. So, for example, option arms, which are potentially negatively amortizing, interest-only loans, other products where, in order to evaluate the risk and the cost of the product, you have to have a relatively sophisticated understanding of rate spreads and rate movements, some perspective of the forward curve. I've known bond traders who have difficulty with those concepts. And as a result, we should not be surprised that a number of people who got into these loans didn't wholly appreciate the risk of what they were looking at. And we should not be surprised that credit performance on those loans, which is bad for investors and terrible for borrowers, has been terrible, really quite remarkably awful. So nobody wins if products are structured in a way and communicated in a way that borrowers don't really understand what they're getting into.
My friends on the other side of the aisle say that, well, they love consumers and they say there's going to be a lot more paperwork created, and that's going to actually stop consumers from getting a mortgage.
I think the opposite is true. There is a point at which more information, more tiny little mice type, 10 font type, in sheet after sheet of paper, not only does not provide any affirmative good in terms of understanding, but it affirmatively destroys whatever understanding otherwise would have been there.
How about reverse mortgages? Because we have this growing population, the baby boomers, right? I'm one of them. And it's growing, and it's just going to continue by millions and millions of people. Reverse mortgages, are you going to take a look at those?
We are. It's one of these products that, on its face, actually, it's quite ingenious thing. The demographics look quite positive. There might be a real productive use for the product and its growth over time. It's also something that is obviously definitionally the most relevant for a potentially vulnerable population, and one that we are specifically charged with. And we also have the duty to perform a study and publish it with respect to reverse mortgages.
It's good. So we'll learn, because reverse mortgages sound great, but if you have to pay the taxes and you got to fix the leaky roof and you don't understand all of the conditions, a reverse mortgage could literally put you on the street without a stream of income. And so you're going to take a look at that, both from because of your requirement that we put that you look at senior citizens and protect them in a special capacity, and in terms of mortgages in a general capacity.
Absolutely.
Well, I think that I'm looking forward to those studies and making sure that the public has a broad understanding of those studies so that they can be better protected. And I thank you very much for your testimony today.
Thank you.
Thank you. Mr. Lichtmeyer for